Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, so the green line is the 20-day simple moving average, the middle Bollinger Band, two standard deviation Bollinger Bands, and it is a short, intermediate, long term. It's on my technical analysis. It's basically the inflection point of inflection points because it really defines whether we're in a buy dips or a sell rallies market and whether or not the S&P wants to live above it or below it. And it typically, when it chooses to do that, it does it on a fairly consistent basis above. And if you go a little bit farther back in the chart, 2021 and stuff, our basically the majority of our existence was below it. But now, spend a little time at the lower band. We're back at the middle band. And you can really see on the hourly chart, we are consolidating at the middle band. We have been brawling over it yesterday. They tried to break it out. They tried to break it down. Didn't work either way, and now we're just hanging out. A very sedate Globex range of 13 and a quarter handles. That's it. That's it. And it's funny because we're calling that sedate, but you go back 6, 7, 8 years ago, you'd have a Globex range of like 5 and a quarter. So it's like, 13. Jeez, that's just a waste of a night when, the volatility is still halfway decent. As we head into today, the Bollinger bandwidth is pretty tight. 0.31, tightest it's been in a bit. You can widen this out. Yeah, we got down there around here, 20th of February. So, it comes and goes. Well, here we are. We've kind of dropped off the earth here. So what that typically tells us is we're going to get some kind of a resolution. Traders get themselves into trouble trying to guess. And yeah, I'm using that word very, very precisely here. Guess which way a consolidation like this is going to move, because I am telling you right now, it's a coin flip. Anybody who's being honest with you, it's a coin flip. Anybody who wants to play for, I got it right, is going to fucking guess, and they'll guess whether it's going to be up or down, usually based upon their ideology and talking their book and all the other crap that goes with it. Look, we are at a massive inflection point on long, intermediate, short-term basis. We've been here for 2 days. There's a decent amount at stake through the spring, and it's going to take its sweet time to figure it out, and then it's going to expand. The cool part is that when it does expand, there's going to be lots of handles on the other side and plenty of time to get in. Don't chew yourself up trying to guess which way it's going to go and just, long, short, long, short, long, short, long, and by the time it's ready to go, you are out of mental capital. You've expended a lot of physical capital. And then there goes the train at the station. And you're just like, nah, screw it. I can't do this anymore. And that's the one that will go. Why? Because trading is hard. And it screws with your brain. So, what do you do instead? Look, I would imagine during the course of the day today, we're going to be long a little bit, we're going to be short at times, and I'm probably going to have to put what we call no trade zones on the account, which is where it's like, look, the tape is here and here. It can't make up its mind between, but right now, if you don't want to overtrade today, you could take 40.54 to 40.62 and say, you know what, either convert 54 to the downside or convert 62 to the upside or leave me alone. You're not getting my money. You're not getting my commission. You're not getting my money. 54 to 62. Figure it out. I'm going to go get some coffee. Let me know when you guys are done beating the crap out of each other, and then I'll take a trade. That is a much more mature way to handle a choppy tape than, just throwing a bunch of stuff at the wall, hoping it sticks, getting torn up. Or worse, planting your flag saying the tape has to do X, and then getting banged up again, and then maybe it does work out. And what happens is when it does work out in that direction, you basically get all your money back from all your screw ups, and then then you cover it or you take it off, and you swear you never do it again until tomorrow when you do it again. Or what I described before, you bang yourself up, you finally quit, take your ball and go home, and then it moves. And then your brain really is jello. So, and don't tell me these little anecdotes are not resonating with the vast majority of you out there. Because we're all traders, and we've all done it before. The question is, are you going to keep doing it again and again and again and again? My suggestion is to not do that. And part of what we do is we teach you how to not do that. Numbers wise, real quick, then we're done. Hourly mid-band, 57, basically 58, which was yesterday's OPG. So, I mean, it's just the OPG being where we opened the regular session. So we literally have gone nowhere. VWAP, 58.75, proprietary moving average, 58.5. Do you sense a theme here? The daily pivot, 59.30. Daily mid-band, 60. So you've got so much jam between 58 and 60, it's not even funny. Price has been down to 54.55, can't get it done. Price has been up to 62.64, can't get it done. So there's the playing field. It's tight. Don't get torn up. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow.